Welcome back, everyone. This is Gail. Well, here we are, where the rubber meets the road. After accounting for all of the pieces ahead of this segment, we have finally arrived at the tax overview segment. Just to reiterate or identify how we arrived at this point, let me do a short review. We covered the filing statuses. There are 5, which is single, married filing joint, married filing separately, head of household, and qualifying widow or widower. Then there is the entity's information. That is the taxpayer's name, social security number, address, etc., etc. Next is the standard deductions questions. Can someone claim the taxpayer or the taxpayer's spouse as a dependent, as well as the age and blindness questions? Those need to be answered. Next up is the dependent section, which covers the dependent's name, the social security number, relationship to the taxpayer, etc. Dropping down to the income part. This is Form 1040, page 1, lines 1 through 9, as well as from Schedule 1, Part 1, Additional Income, line 9. Next up is the adjustments from Schedule 1, Part 2, Adjustments to Income, line 22, as well as the charitable cash contribution up to $300. Then there's the question of standard deduction or itemized deduction. Recall, if the itemized deduction from Schedule A is less than the standard deduction for the taxpayer's filing status, shown in the bubble to the left of line 12, TaxSlayer will automatically calculate the most beneficial deduction for the taxpayer, whether it's the standard deduction or the itemized deduction. Then we have the qualified business income deduction. This is an automatic calculation in TaxSlayer from the business schedule. So now we're down to taxable income, line 15. Here is where the taxes are figured. This slide shows Form 1040, page 2. In this overview segment, I'll talk about lines 16 through 24. Line 16, no need to worry about anything here because TaxSlayer software figures the tax based upon the taxable income for us. The other 2 forms mentioned are not our clients, so I'm not even going to address them. Line 17 directs us to Schedule 2, line 3 for this amount. Let's take a close look at Schedule 2. Line 1 is not our VITA client. Line 2 is Excess Advance Premium Tax Credit Repayment, attached Form 8962. This line specifically is tied to the Affordable Care Act and the marketplace insurance. If the taxpayer's spouse, or dependents were enrolled in or paid for health insurance coverage from the marketplace, this line might apply. The health insurance marketplace would have sent the taxpayer the Form 1095A containing numerical data which is required to be entered into the TaxSlayer software. Publication 4012, tab H, pages H-11 through H-18 explicitly covers the topic of the premium tax credit. The figure on the left is Form 1095A, which the taxpayer receives from the marketplace. It is a source document, so to speak, providing the taxpayer with information regarding the marketplace health care coverage for the year, along with some monthly premium amounts in Part 3. The Form 8962, the figure to the right, is the actual tax document which attaches to the tax return. You will notice Part 3 of the Form 1095A, lines 21 through 33, and Part 2 of the Form 8962, lines 12 through 23, are very similar with just a few more columns on the Form 8962. As a tax preparer, your job is simply to input into TaxSlayer Health Insurance Screen Form 1095A monthly premium amounts shown in the 3 columns for lines 21 through 33. TaxSlayer takes care of just about all of the rest of the form for 8962. It can be intimidating, but trust me, it does work. Notice Form 8962 Part 3 references the repayment of excess advanced payment of premium tax credit. The credit result is shown on line 29, which then flows to the Schedule 2, line 2. Now, you're probably saying to yourself, she still hasn't told me what the premium tax credit is. Well, when the taxpayer goes to the marketplace for health insurance coverage and ends up paying less than the actual marketplace health insurance based upon what the taxpayer has communicated to the marketplace, the taxpayer pays a discounted or a premium insurance amount, which is less than what the actual marketplace insurance actually costs. Now, I'm going to leave it there. Remember, this is an overview. Extensive information can be found in the publication 4012, tab H, pages H-11 through H-18, or in any of our recorded training events. Now, back to Schedule 2, line 2. The excess advanced premium tax credit repayment amount flowed from the Form 8962, line 29. Line 3 in Vita Client situation is the same as line 2. Then line 3 flows to the Form 1040, page 2, line 17. Line 18 represents the tax from line 16 plus the excess premium tax repayment from line 17. We're down to line 19 now, child tax credit and credit for other dependents. As the slide indicates, the mentioned credits has to do with dependents, and it also signifies that these 2 credit reduces the tax liability only, meaning these are non-refundable credits. They cannot be used as money in the pocket refunds. You will also note here that these calculations are automatic through the TaxSlayer based upon dependent information that's already been input. Publication 4012, pages G-2 and G-5 has information regarding these 2 credits. Well, that's all for line 19. Moving on to line 20, the amount from Schedule 3, line 7. Let's go there now. This slide is a picture of the Form 1040, Schedule 3, Additional Credits and Payments. This form contains 2 parts. Part 1 is the non-refundable credits, and Part 2, other payments and refund credits. Although the child tax credit and other dependents credit are non-refundable credits, they do not go on this form. Only the items listed in Part 1, non-refundable credits, goes on this form. Let's speak to this, Part 1, first. Line 1 is the foreign tax credit. This credit generally isn't our Vita client. However, if the client does have foreign tax credits from foreign investments, it will show up on Form 1099B from the broker or the brokerage firm. Publication 4012, pages G-6 through G-8 contains information on this subject. Line 2 is the credit for child and dependent care expenses, attached Form 2441. Publication 4012, pages G-9 through G-12 contains information on this credit. In order for the taxpayer to take advantage of the credit, the taxpayer must have a qualifying person. This person could be a dependent child under age 13 or any dependent person incapable of self-care. In each instance, the qualifying person must live with the taxpayer for more than half the year. The taxpayer must have a source document from the care provider with the care provider's name, address, identification number, etc., in order to claim the credit. TaxSlayer software will guide you from the deduction screen in completing the Form 2441. Line 3 is education credits from Form 8863, line 19. Publication 4012, tab J, is dedicated to all things education credits. As an overview, there are two types of education credits: American Opportunity Credit and Lifetime Learning Credit. Each of the credits carry maximum amounts, refundable or non-refundable stipulations, qualifying expenses, who can claim the credit, applicable source document requirements, and a host of other items. Just from what I've mentioned here tells you really need to read tab J of Publication 4012 to be clear in this area. Line 4 is Retirement Savings Contribution Credit, attached Form 8880. Information regarding this credit is located in the Publication 4012, pages G13 through G15. The credit is based upon the taxpayer's adjusted gross income and whether or not they participated in a retirement plan, whether it's an individual retirement account or an employer retirement account. The pages in Publication 4012 provide excellent clarification in this area. Line 5 is the residential energy credits. Publication 4012, behind the EXT Legislative Extenders tab, page EXT 7, provides key points regarding this credit. Form 5695 is used to claim the residential energy credit. Part 1 of that form is out of scope for VITA clients. However, Part 2 applies to the VITA client. The energy credit has to be attached to the taxpayer's personal existing residence located in the United States. The total combined credit limit is up to $500. This credit does not apply to energy-efficient items on a new build residence. Once again, Publication 4012, page EXT7 contains valuable information. Now, line 6 is not our VITA client. Line 7 simply adds lines 1 through 6. The total amount flows to the Form 1040, page 2, line 20. Form 1040, page 2, line 21. This line represents the total non-refundable credits from lines 19 and 20. Line 22 subtracts line 21 non-refundable credits from the tax shown on line 18, however, not below zero, meaning if the non-refundable credits exceed the amount of tax, there is no money in the pocket refund result. Line 23, other taxes, including self-employment tax from Schedule 2, Part 2. Here we thought we were done with the taxes part, right? Well, I promise this is the last part of the taxes segment. This is going to be quick because most of these do not apply to the VITA clients. Let's get back to the Schedule 2. Back to Schedule 2, Part 2. Line 4 is self-employment tax. Recall that the self-employed person has to pay Social Security and it's called self-employment tax for that self-employed person. If the self-employment income is $400 or more, self-employment tax kicks in. The tax layer software does the actual calculation from the Schedule C self-employment form net income. Nothing to do here. Line 5 typically is not the VITA client. Line 6 is the additional tax on IRAs, other qualified retirement plans, etc. If the taxpayer had a distribution from a retirement account before age 59 and a half, typically there's a 10% penalty. That penalty shows up in the form of a tax on the tax return. If you only owed the additional 10% tax on the early distribution, you may be able to report this tax directly on Schedule 2, Line 6 of the Form 1040 without having to file the Form 5329. There are some exceptions to this 10% penalty based upon the taxpayer's situation. Consult the publication 4012, page H4 through H-6 to find out all about the possible exceptions as well as screenshots of the tax layer software. Form 5329 covers some other penalty tax issues as well as penalty exception implications as well. So go to irs.gov and search Form 5329 and its instructions for additional insight. Line 7A is not the typical VITA client, so I won't even comment here. Line 7B represents the repayment of first-time homebuyers credit from the Form 5405. This tax issue occurred in the tax years of 2009 or 2010. Taxpayers who purchased a home for the very first time in those years were allowed to receive a credit or a refund of up to $8,000 from the IRS. This refund was a loan without interest and needed to be repaid over the next 15 years or less. This repayment shows up once again in the form of other taxes on line 7B. There is a line on the Form 13614C intake interview form in Part 5, line 6. Go there and take a look at that information. The remaining lines 8 and 9 are not our VITA clients. Line 10 is the total taxes line, adding lines 4 through 9. The total is entered here and flows through to the Form 1040, page 2, line 23. The next line, line 24, is the total tax after adding lines 22 and 23. I promise this is the total tax due on the tax return with all the income being reported and all the adjustments having been taken. Finally, we're there. So I'm going to stop right here and cover the remaining lines of the Form 1040 in the final segment coming up. Y'all come back now. You hear?